Hey guys, once you see that guy with the goofy smile on your screen, you know what time it is. It's time to earn passive income with Leo. Let's talk about one of my favorite company again, STAG Industries. Ticker symbol STAG. There you go. How is everybody doing today? I'm just checking back in, trying to do like a weekly update, try to keep you guys informed on what I'm doing. Just trying to be transparent here on YouTube since I'm talking to the world. Hey, I'm assuming the world anyway. Um, Last week we had a rough week in the stock market. Stock prices had dropped a lot due to the banking collapse. There was a bunch of fear in the market, and it reacted. When people think that banks are going to collapse and there's going to be a running on the bank, people start to pull their money out of the stock market and stuff like that. Of course, it's risky. You can take risks, but some of these risks are worth holding on to. And if you're doing your research on some of these companies, it will pay off in the long term. Like for example, I try to invest in dividend companies and growth stocks, and it's a very few companies that does pay a dividend and on top of growth. you know so when you find one that we're talking about, like this one I'm talking about, Stag Industries, industrial, you know um, I think it's worth talking about. I think it's worth checking into. This is the one we're talking about, Stag right here. STAG. Yeah, man. So let's see what Stag is all about. All right. So Stag Industrial is is a U.S. it's a large target market for that type of company. It's a large target market. As a matter of fact, it's a $1 trillion market. Yeah, in the U.S. industrial market is more than $1 trillion total in size. And if you look at what Stag has, is technically a large portion at 1%. It's not easy to take. Well, almost a 1%. It's not easy to take up that type of market share. Sorry, if my camera goes off, try to touch it. Right. Um, it says here, Stag opportunity sets spans to the top 60 plus markets in the USA. This is so small. It's hard to read this stuff. um, One more thing. Why is this so small? I'm sorry, guys. This is pretty small. Let me see if I can get it bigger on my side. There we go. Zoom that up. And let's block that. I'm gonna go off camera just a little bit. You'll still see me, but I'll be in the corner. Okay, here we go. So the U.S. Industrial market is more than 1 trillion in total size. Stock opportunities set to span the top 60 plus market in the United States. Relative value investment strategy across the fungible industrial market, enhance value creation. Like I said, like It's a $1 trillion total industry market. STAG has almost a 1% lock on that market. STAG shares target assets of universe is 0.7. All right. This is another way to say that, all right, as of today, the funds from operations, this is how you value a company. Not a company, a REIT or MREIT or I'm sorry guys, that haven't had enough coffee today. Anything under 25 is considered to be a bargain price for buying a company. 14.57% is a good place to get in. And here are these are their sophisticated and diverse tenant base, of course. It says the top 10 tenants are less than 4% of ABR, and top 20 tenants are less than 20%. This is so small. Oh my god. And if you look at right there at the top, let me see if I can get this bigger. If you look at their top 10 tenants, right there at the top you'll see Amazon, Eastern Metal Supplies, American Distributor, FedEx, and a few others, of course. Just to show you their client bases. There we go. Let's bring this back down smaller. They have a few other competitors in their industry, of course. You have FR, EGP, KRC, and of course STAG here. If you look at their gross profit margin, 80% compared to all their competitors, so they are outpacing everybody in this industry. If you look at the cash on their balance sheet, it's over $50 million. So they have money, and they can open a new warehouse or wherever they choose fit at any time they choose fit, based on the amount of money they have on their balance sheet. All right. Like I was saying, that to find out a company that's undervalued, you look at their FFO, which is a price to funds from operations. They have another way to calculate this. I also there's a YouTuber by the name of Joseph Hogue. I'll link his video in the description. You can go to his page. He teaches a lot about how to value dividend companies, REITs, MREITs, and STAG is one of his favorite that he talks about too. And he'll show you how to value a company like this. Like I said, anything under 25 is a good price at this point. If you look at EG properties, they are at 25, which is at fair value. Then you have First Industrial Realty Trust, they are at 18, STAG is at 14, and of course you have Kilroy Realty, which is will be considered at a better value price. And then you have these are their competitors right here: STAG Industries, Sector Real Estate, and then the Industrial REITs. So these are those a few in the same sector as STAG. If you look at their market cap with 5.5 billion, 6.8 billion, 7.7 billion, 5.76 billion. So each of them and the market cap is how much it would cost to buy that company today. And their expense is a little bit too high that you can't speak about the positive without the negative. So they need to work on bringing that down. If you see year over year, they have been growing the company. Their revenue have been increasing since inception, 2013, 14, 15. Those are constant growth in revenue and profitability. Year over year, STAG grows their revenue 17%, which is the highest amongst their competitors. Even over the 5 years, just the same way. Year over year, they are outpacing everybody in that category. Sorry to be going this fast. I'm not trying to make the video too long. If you look at their dividend yield, is 4.75%, and which is give us an annual payout of $1.46 per share. If you have one share, which is valued I think at $33 today, you would get $1.46 share at the end of the year on your one share. They do pay a monthly dividend, which is 12 cents per share, and they have been growing that dividend every single year. If you look, it's been 10 years of growth right here, and their frequency is monthly, and they do pay 12 cents per share. Let's go back to that and put that roughly. So 12 cents per share. If you have 10 shares, you move the decimal point one place to your right, and that will be $1.12 for your 10 shares. If you have 100 shares, it'll pay you $12 per month for your 100 shares, and that will pay your Netflix for the rest of your life. Imagine that. Now you have free Netflix forever. If you look at their dividend yield, it is 4.75% compared to everybody else. They are the leader and they are a monthly paying dividend. Let me repeat that, monthly paying dividend. I would love to see $12 every month in my account for just holding these companies for the rest of my life. And not only that, if you reinvest these dividends, it will go back and buy the same stocks. So if you have 100 shares, now the $12 is gonna buy you 100 plus a third share at this price today. Of course, STAG is a growth company, so you can't expect that share price to be the same. So you want to keep reinvesting those dividends until you are into retirement. When you're seeing a big enough payout, like for example, now you're getting $120 a month from the same company. Now you're looking at, okay, my phone bill is paid, or my light bill is paid, or guess what? This company is gonna pay my light bill for the rest of my life. You know, these are the type of excitement I like about dividend investing, getting paid without working. But you have to put in the work now to get yourself there. All right, don't forget that. And of course, they are the only monthly dividend companies. I have a few more that I would like to talk to you about, but for right now, we're talking about STAG. All right. Then we have their portfolio. Like I say, spans over 60 plus markets. Largest market exposure is less than 8%. You know, their portfolio includes exposure to 45 different industries, you know, like food, clothing, you know, stuff like that. Cars, maybe, storage houses, warehouses. I think there's a slide coming up where you'll see a few of what they actually do. STAG is the ticker symbol. The enterprise is valued at $8.1 billion. That is the amount of assets they own. They own. They operate in 40 different states, and they have over 111.5 million square feet of warehouse properties, and they have over 559 warehouses. The market cap is $5.5 billion. That's how much it would take right now to buy this entire company. And their revenue is over $610 million per year, with a net income of 220. That is their income after they pay their water bill and their interest and their taxes and stuff like that, and their employees and all that. And people take their profits, and managers gotta get paid. Let's give them credit for paying us too. And if you look at this chart right here, this is a straight up to the right chart, year over year of constant dividend growth. This is a growth company. I love it. This is an example of one of their buildings here. This is how huge their buildings are. When you drive past on the freeway, you might see Amazon. That's one of their buildings also. And here we are, STAG Industrials. All right. So guys, I hope I brought to you just a little bit of DD on STAG and what they're doing. This is one of my favorite dividend companies. If you are interested in checking this one out, that would be awesome, because not only are they a growth company, they are also a dividend paying company, and not also a dividend paying company, a monthly dividend paying company. All right, so let's take a look at Yahoo today, and you can see here on their web page. I can go to my holdings. This is my holdings right here. Last time we spoke about one share, and when the market crashed on Friday, about extra 15. My average cost is $33.44. You can see that I'm down a little bit, but I'm not worried about that. I'll get a dividend payment in a couple weeks. I love it. I'm trying to, like I said, short term was 10 shares. I hit my short term goal. My next goal should be 25. If I see any opportunities in the market where the price up like a nice dark red day, I might jump in and grab another 10 and make that 25. If you see my average for $33, I just have a couple, say $500 on this company right now. I'm trying to get to 100 shares. Today the share price is what, $31.80 something cents. If it goes down to like $20, woo, that'll be nice. That means $2,000 will get me 100. If I buy today, you're looking at $3,100. So the lower the price, the better it looks to me, and we can get ready for those growth potential. If you look at the chart right here, this is the pandemic low, was in 2022. Wish I had got in then and there, but unfortunately I wasn't in the market then. If you look at the bull market high in the pandemic, $47. If you look, that was a 99% growth if you had got in right here at $23. Your money would have been doubled. 99.6%, that's 100% increase. I'll take that any single day. But those days are behind us. So we're looking at the days forward. This was the December sell-off right here, $27. It went up to around $34 in January. Now it's back down to $31. Yahoo Finance, I think they have a price target for this at $37 for this year. So that's around at this price around 20, around a 20% increase on your money going forward. If you look at the 52-week range, it was at $42 year to date. So like I said, this is one of the reasons why I like this company. If you go on the financials over here, they have constantly outperformed, growing revenue year over year. Their earnings keep increasing year over year. If you go to show off financial, and then you go to let's go back. Let's go to statistics. Show off statistics. So let's go to statistics right here, and you can click on say the last 5 years and go to historic data and select dividend only, and you can just select monthly, hit apply, and it will show you how they pay dividend monthly for the past 5 years. And if you look 2018, they started paying 0.118 cents, and they have those grown at 9 to 12 to 12.1, 12.2, 12.3. We are at 12.3 now for this year. Next year it should be 12.4. So 10 shares will pay you $1.23, and 100 shares will pay you $12.30, and 1,000 shares will pay you $123. I'm telling you, this is a great company to be a part of, and this is just the beginning. And I can't wait to get this to snowball, and then we can have some fun with it then. So again, guys, thank you for watching my video, and a little disclaimer here: I am not a financial advisor, but do remember to always do your own research and never fully trust anybody that's on YouTube. I'm just showing you what I'm doing, and I hope you can appreciate my transparency, and I'm just learning and earning. Hey guys, peace out, have a blessed day, and I'll see you in the next one. I'll try to do another one next week, make it a weekly update. Please check back in. Remember to share with your friends. Do like and subscribe, and leave your comments in the bottom of the channel. I will reply to those. Trust me, I got you. All right, have a good day. Peace and love.